Hi everyone, good morning and welcome to today's morning report with me, Richard Perry, market analyst at Handtech Markets for Monday the 31st of March. The handover that we've got actually from the Asian trading session has been fairly positive actually, certainly for equity markets anyway. Wall Street closed in slight positive territory on Friday, and that followed through to the Asian session as well. So the slight gains were also helped by a weakening of the yen, which has helped push the Nikkei higher, and that's been reflected through to the DAX, FTSE, which are both just over around about a quarter of a percent higher in the early trading today. The European currencies are not so positive. They're basically flat. The euro is slightly stronger. The sterling is basically flat as we speak. I think there's a fair bit of consolidation that's going to happen in these currencies in front of this key eurozone CPI data that comes out at 10 o'clock GMT. And that's certainly the key bit of economic data that we need to be watching out for today. Last month came in at around about 0.8%, and it's expected to fall to around about 0.6%. So that should, certainly from the data that we had on Friday, the Spain falling into deflation, and also not excessively strong data for the German economy as well. So the pressure is certainly going to be on Draghi going forward if this data continues to fall away, which is what it's been doing in recent weeks. That is certainly the only real major bit of economic data that we've got driving this market today. My chart of the day is the S&P 500. I've been fairly concerned with this sideways shift that we've got going on here at the moment on the S&P 500. There's no major selling pressure that's going on, but certainly there is a bit of a consolidation in this S&P 500 chart. It continues to fall away back towards this support around 1840, 1830, and you've got some key lows in place there that are going to act as support, one would hope. The momentum indicators are still, you'd argue, in bullish configuration, but just corrective at the moment. But you could see a test if it continues to lose momentum. You could see a downside test of the support band between 1834 and 1842 in the coming days this week. But I think ultimately this, with the significant data that we've got due this week, and the possibility for non-farm payrolls to be fairly decent on Friday, this could ultimately lead to a breakout. But certainly in the absence of any corporate data that's driving this S&P 500 forward, it's sort of fallen into a bit of a consolidation phase. This is the intraday chart, which shows the lower highs on the chart there. The latest one was on Thursday at 1875, and again on Friday came at 1866. So you've got a few lower highs there that need to be overcome if this is going to regain some upside momentum. On this chart, if you're looking on the RSI, it's sort of now finding resistance falling over underneath that 60 level, and the MACD lines have sort of coming over and falling down again underneath the zero neutral line. So you argue therefore that on an intraday basis you're in a slightly negative configuration there, and you could see continued downside pressure back towards, as I said, these levels here. But ultimately, as I said, I think this chart is just a big consolidation phase, and there will be pushes back towards the highs, and ultimately more than likely for a breakout to a new high in due course. Anyway, I wish you good luck in your trading on the S&P 500 today, and I will speak to you later. Thank you.